Hello beautiful people, it's me Tasha, CEO and Chief Coach at Goddess Day, and today I'm bringing you a new video where I'm talking about what is the safest investment options for newbie investors. Now, I asked this question over on Twitter the other day and I got so many responses, and so I want to make sure that I address some of those responses first. And before I get into everything, if you're watching this video now, go ahead and comment below and let me know, what do you think are the safest investment options for newbie investors? Comment with whatever you think before I give the answer away and see if you can get it. The reason I like for you guys to comment is because I know that some of you are out there wanting to invest. You don't really know what you're doing. You probably have an idea of what you want to do. And when you start to answer questions like this, it forces you to think about what you do know, what you don't know, what you think you might know, but you're not quite sure. And you get clear about what you need to confirm. So answering these questions just moves you that much closer in the direction of becoming a powerful investor. So yes, there's always a method to my madness. So to get into the question right now, let me address what some of you guys said. So amongst the popular results or the popular answers, you guys said bonds and CDs. And by CDs, I mean certificates of deposit that you can get with the bank. And when I tell you that that was not even on my radar, you guys, and technically it's true, obviously, a bond is a safer investment than a stock. A CD is an even safer investment than a bond. So it makes sense that that's something that you would think is a safe investment for a newbie investor. But the thing is, I'm not quite sure if you guys are thinking about opportunity cost, because losing money is not the only risk out there. There's also the risk of leaving money on the table, and that's opportunity cost. So opportunity cost is just about when you choose one thing, what are you foregoing with another thing? And when you choose bonds or CDs, which are safer, what you are foregoing is all of that potential return that comes with stocks. Now, before I solidify that in your brain, I want you to know that I did some research and I really couldn't confirm in the way that I wanted to confirm that stocks are consistently outperforming bonds like people tell you. I hear people parroting this all the time, that stocks traditionally and historically outperform bonds, and I wasn't able to confirm it to my liking. So I will continue to do the research on that. But what I do know is that even if some bonds are keeping pace with stocks over longer periods of time, all bonds are not created equal. So if bonds are on your radar and you do want that safety, make sure that you're always looking at performance, and obviously you want to choose the higher performers over the lower performers when it makes sense, and usually it makes sense. Now, there's a reason that I haven't brought CDs into the conversation, and that is because if you're thinking about investing in CDs, I think don't. Now, this is not investment advice, you guys. Don't be just indiscriminately doing what I say, because I'm just telling you what I do as someone who has, been an investor for 14 years and who taught herself how to invest from scratch, right? So I got a little bit of experience under my belt, but you don't have to do what I do. You can figure out the strategies that work for you. But when you watch videos like this, what that means is that you don't have to start from ground zero. Now, looking at certificates of deposits, especially in this economy, for me is just like a glorified savings account, and I cannot imagine locking up that much of my money for that little return. 1.5%, 2%. Get a high yield savings account and call it a day. You deserve more. Your money deserves more. So this is why traditionally we look at stocks, because we know that historically over long periods of time, they're going to produce 10%, about 7% after you adjust for inflation. So to summarize all of that, yes, bonds and certificates of deposits might be safer than stocks, but what are you giving up? So that's something that you want to consider even when you're thinking about safety, because we don't want to choose safety to the point that we're foregoing the growth of our portfolio, which is the whole reason that we're investing in the first place. Let's jump into what do I actually think is the safest investment out there for newbie investors. And that's really simple. That's going to be an ETF or an index fund. So for those of you who answered that, congratulations, we're on the same page. Not necessarily that that's right, That's just what I say, and we're on the same page. So yes. Now, what is an ETF or an index fund? I want to explain that really quickly for those of you who don't know. I usually consider ETFs and index funds to be the investment version of like a mall. That's the analogy that I like to use. It's not the only accurate analogy out there, but it's the analogy that I like to use. And so let me break it down like this. You are investing in your favorite store. I'm going to use Nike because everybody always uses Nike. Really easy to understand. You invest in Nike, right? But why would you do that? You don't know that company like that. You probably haven't been poring over those financial statements like that. And if something happens with the Nike brand, they could literally say the wrong thing on Twitter and their stocks could plummet. Or in an economy like this, if you're investing in one company during the coronavirus, where you look at Delta, Carnival Cruise Line, AMC Theaters, companies that were thriving before and you never would have been thinking that they were about to go out of business, boom, all of a sudden they're thinking about bankruptcy. So if you were investing in something like that and then all of a sudden the rug gets pulled out from underneath you, you're going to be a very sad investor because you're going to lose a lot of your money. And that's what happens when you have overexposure to individual stocks. However, if you're not just invested in Nike, but you're invested in the whole mall of stores. So let's say you have Nike, you have Finish Line, you have Champion, you have Express, you have Macy's, you have Sephora, you have all of these different stores and all of these different industries, right? So even when you're investing in a mall, sometimes stores close in a mall, but do you lose any sleep over it? Probably don't even remember what store closes because there's so many other stores to choose from. That is the beauty of investing in a mall. Yes, you're going to have some losers, but primarily you're going to have winners, and you're not overexposed to one thing or one market. You get instant diversification into so many different things. And there are index funds and ETFs that allow you to invest in the entire stock market, so you don't have to do any strategy at all. All you have to do is take advantage of investing in the total stock market. Now, granted, this probably isn't the best strategy in the world. It's not the most advanced strategy in the world. If you're investing in the total stock market, you can probably count on that 7 to 10%, keeping in mind that historical performance does not predict future performance, but you know, it's what we have to work with. So that's what we work with. Remember, that's not guaranteed though. Remember, it's not guaranteed, but it's likely. You can't know what's going to happen just because you've seen that historical performance. And I definitely want to drive that home because I don't want any of you messaging me saying, Tasha, you said the stock market was going to do this and it didn't do that. I don't know what the stock market is going to do. I can just tell you what it has done historically, and we use that information to inform our decision making now. If you're thinking about the safest thing that a newbie investor can invest in, I recommend that you look at equity ETFs or equity index funds because you get the diversification while also being able to get a better performance historically. So thank you guys so much. Enjoy the rest of your day, and I'll see you next time. Bye.